We've got Sudhir Sitapati, the MD and CEO at GCPL, joining in on the show right now. Sudhir, hi, good morning. Good to have you on ET Now. Thanks for your time. Tell
Hi,
me a
good
little bit
morning.
more about this Tamil Nadu plant. How much would be the total volume and sales that this particular plant is going to generate?
Our Tamil Nadu facility in Chengalpet is a multi-category facility where we're pretty much making all the categories we're present in. We anticipate between 1,500 and 2,000 crores of revenue coming out of the Tamil Nadu facility pretty soon.
Sudhir, is it okay if I just switch gears and ask you a simple question about where has demand revival happened for the sector and for your company? Where demand revival is yet to happen and where you're confident that the demand revival will happen?
I think there are two parts to the story. I think for the last 2 years, we've been seeing a slightly slower rural economy and urban economy has been doing well. That trend kind of reversed in the last 1 or 2 quarters, where we saw rural markets doing better than urban markets. Where we saw urban markets kind of slow down. I'm quite hopeful, however, that urban markets will pick up between this quarter and the next. I'm saying, it's been a bit of sometimes rural, sometimes urban. But having seen many of these cycles, I think the time is right for both urban and rural to kind of pick up pretty soon and consumer FMCG to do quite well in the near future.
Can I say that the government initiative of tax cut, lower inflation, the fact that the base effect has kicked in a lot of the commodities, that will ensure that 2025 for the industry and for Godrej in particular will be a much, much, much better year?
I hope so, because I think both the factors, if you looked at Q3, a lot of FMCG companies, including us, didn't perform very well. And I think one of the causes of this urban slowdown was high food price inflation, which seems to have come down over the last 2 months. And certainly, 1 lakh crore coming in the hands of consumers through income tax, along with the whole series of state schemes and welfare schemes, do augur well for FMCG in the near future.
All right. Hi, Sudhir. Good morning. This is Shrishti also joining in. But Sudhir, when we see some of your key commodities, case in point being palm oil prices, they are seen to be at a multi-year high. Give us some sense that where do you see the prices headed of palm oil prices, and what sort of a likely impact on the margins do you envisage?
I'm not an expert, or I don't want to comment on where palm oil prices will head. I can tell you what the other experts, there's a general consensus it may have peaked out and will fall in the next few months. But I can't specifically talk about that. What I do know is that in September of last year, 24, we had a double whammy where there was a sudden increase in import duty of palm oil. And at the same time, international palm oil prices went up. So there was an unusual period of very high inflation in our key commodity of palm oil. That has probably peaked out. How much it will fall and whether it will fall, time will say. Maybe in the next few months, we'll know that.
I'm just, cutting from one pocket from Tamil Nadu to palm oil prices, and then, we are moving back to the consumer demand. I hope you'll appreciate, because, aap aate nahi ho jata. So we are trying to make the most of it when we get you on TV. I hope you'll appreciate that, right?
No, that's fine. That's fine. You can ask me as many unconnected questions as you want.
I have a lot of questions. How much time do you have, sir? That is the point. I have a lot of questions. 25 questions are ready in my mailbox. Okay. My next question really is the pricing power coming back to FMCG? Because up until now, companies have suffered both on the price front and on the volume front. Do you see a revival happening in price also? Because volume, you're sounding confident. Are you confident of price?
Yeah, I am confident of, pricing is a function of commodity inflation and also, to be honest, the rupee rate, because a lot of the raw material for FMCG is either crude oil or palm oil. Certainly on the food front with palm oil, there's inflation. With the rupee weakening, you'll see rupee growths. So some kind of pricing, which we haven't seen for the last few years, I suspect there'll be some kind of pricing that will come in, certainly into a lot of commodities that depend on palm oil. Less so for crude oil. Crude oil is quite soft, though the rupee is quite weak, so they might balance out. So I think I do think some kind of price growth will come back.
Fantastic. Now I come to the whole pyramid of consumption, which is luxury categories, mass categories, and pure rural categories. If you have to divide it in these three portfolio, that is how FMCG companies look at it: luxury, mass market, and then completely rural focus. Can you give us a classification that what are the trends in these categories? Would you like to, if you want, you can add another category also.
I think certainly since COVID, and it's a little hard for me to comment on this in the last 1 or 2 quarters because this may be changing. We did see a pretty prolonged K-shaped recovery after COVID, and I have a suspicion that's over now, where we saw the top end of the market growing much faster than the bottom end of the market, both rural and urban poor. That may be now neutralizing. I have a sense that consumption growth will be more broad-based than it has been in the last few years for a variety of reasons, including significant welfare schemes, etc. So this is a trend that is going to change in the next quarter or two, or has already started changing.
Godrej has presence in India and a formidable presence outside India. You've acquired a lot of assets. I've had the pleasure of tracking this company for years now. And of late, your global businesses have had a little bit of yes and no. Are things looking better on the global front also for you?
Yes. In fact, I would say that there is probably better consensus on the global front. India has been having a little bit of turbulence. I think a couple of our key businesses, Indonesia has been doing quite well. Nigeria and Argentina, which were both very volatile countries, over the last 1 year, they seem to have stabilized from a macroeconomic point of view. So I would say that the international outlook is good, and perhaps in the short run, perhaps even better than India in the immediate run.
When do you think your non-FMCG categories will start stabilizing? When I say non-FMCG, I'm not talking about soaps and shampoos. I'm talking about, let's say, hair dye. I'm talking about, other non-core businesses which you have in the Godrej Consumer.
See, I mean, all our businesses are FMCG businesses. The one that perhaps is somewhere halfway house on FMCG is our Africa hair extension business. That business, there were large parts of it which were profitable, which we kind of divested. And the parts of it which are profitable, we're kind of committed to growing those, which are largely in South Africa and Nigeria. So, and I would say that the salience of these non-FMCG categories over the last 2-3 years has reduced in our business, even in geographies like Africa. So I think we've become more of an FMCG company than we were in the past.
What's been your observation on how the Indian consumer has been? We always talk about this premiumization trend. We talk about digitization, more than physical formats. People like to order over apps. Has the consumer behavior changed? And anything particular that you've observed over the years? And of course, become a lot more price conscious also, I guess.
India has about 300-350 million households. I've observed a lot of change in the top 30-40 million households, which is really the India that all of us see, both in terms of category adoption but also in terms of how they shop. But I would say that the next 250 million consumers in India, I would have hoped over the last 5-6 years, change would have been faster there than I've seen. Maybe what happens is that the first 30 to 50 million consumers is where all the change happens, and then there's a trickle down. But we're now waiting for the next 250 million consumers to change with the same rapidity that the first 50 million consumers have changed.
All right, Sudhir, let's talk about the quick commerce space, because just last week we were speaking to Tata consumers and they told us that they are now driving 6 to 7% of their sales from this particular segment. Give us some sense there. How is Godrej Consumer looking into scaling up the quick commerce segment? Are you already into that? And what sort of a sales are you expecting from this particular segment to come in the times ahead?
I think firstly, quick commerce has been quite an amazing journey, and that channel has really grown fast. It solves two fundamental consumer problems. One is the need for convenience, but two is the need for the appropriate pack size. One of the issues with buying on e-commerce is that you are kind of forced to buy very large pack sizes, which consumers often don't need. And quick commerce moves to what I call the modal pack size of the category. So these are two big consumer problems quick commerce solves, and that's one of the reasons why you've seen this kind of explosive growth. Our salience of e-commerce is pretty similar to what you said. Most companies are in that range, maybe 5% odd is roughly right for everybody. I think, for us to drive channels, probably we just have to be present and efficient in channels. Channels drive themselves for macro reasons, and our job is really less to drive the channels themselves drive themselves, but to be present in fast-growing channels, to be present in all channels and service consumers properly, but certainly to be present in fast-growing channels like quick commerce even more.
Higher, Sudhir, when it comes to QCom platforms?
I'm sorry, I missed the question.
No, I'm asking if the margins are higher in quick commerce platforms.
Yeah, I mean, look, structurally, you have to understand that quick commerce sells on convenience, which is a little less price sensitive, and it sells the modal pack of the category. Modal pack means every category will have a small pack, a mid-size pack, and a very large pack. The small pack and large packs tend to be discounted, and the mid-size pack tends to be the most profitable. So structurally, quick commerce, because people are buying for convenience and not discount, and they're buying the modal pack, tends to be a pretty profitable channel.
I'm going to get headlines from you, sir. Not that you've not given us, but I'm going to get some few headlines which I think everybody would like to connect to. In your last 2 quarters, you've been slightly non-committal about your growth. You've said that, okay, things are looking up, but I hope they were better. Can I say that Sudhir finally in middle of the quarter is ready to literally stick this neck out, which is what you're doing? To look at the screen?
No, it's not proper for me in the middle of the quarter to tell you what the quarter is going to be like. But as I said last quarter itself, that the issues that we faced last quarter, we were convinced were transitory issues, and that we continue to be convinced that these are transitory issues, and the structural situation is better.
I think for the industry, we will go back to the GDP growth in terms of volume, because for Godrej and for HUL, the numbers are not even close to the real GDP growth. Forget the nominal GDP. Indian FMCG sector, the large companies are growing below the GDP. When will it come to the GDP growth? That's a bare minimum, right? That's a reasonable expectation to have.
No, I think FMCG actually should beat GDP growth. Volume growth of FMCG till a country becomes $10,000 per capita income should beat GDP growth. That's what we've seen across the world. So what we're seeing in India is a slightly anomalous situation. I would put the caveat saying that what's important to look at the health of FMCG is not GDP growth, but domestic consumption growth. That is because if you have savings go up, if GDP is driven by the top 20%, who are contributing to investments and not to consumption, that doesn't really affect FMCG. Last financial year, for example, GDP growth was 7%, but domestic consumption growth was 4%. So the real number to look at is domestic consumption growth, which is picking up, by the way, in the last 1 or 2 quarters.
When will you go back to the enviable margins with Godrej consumer enjoyed, the enviable product category advantages which you enjoyed? Could it take a year? Could it take 2 years? Could it take 3 years to go back to your enviable margins? I've tracked Godrej where margins were 20% plus. I've tracked Godrej when your ROC was north of 20%. When will you go back? Is it still a distance away, or it could happen soon?
Our margins are already 20%, Nikunj. So, it's not like we're a low margin. We had 1 or 2, because of this palm oil crisis, we've had 1 or 2 quarters of, relatively poor margin when compared to the competitor. But if you look at our global margins, they're around about 20. Even in a quarter like last quarter, if you look at our India EBITDA margins, they're close to 23. So these are structurally healthy margins. They're at the lower end of where they should be because of the inflation in palm oil, and they will improve, but they're only at the lower end of already a good number. The important thing is not margins, Nikunj. The important thing is for us to grow faster.
Okay. And you see that happening soon. So I'll wrap it up with one final comment which I got from my guest team. They said, Sudhir is coming on the show. He's a rare management. Please ask him as many questions as you can ask him. So my last question to you is that what should your shareholders expect in terms of a promise now?
See, you have to take both for the sector and for the company. If you take a slightly long view, India is got a long runway of FMCG growth. I know it looks difficult to imagine it because FMCG is not have an even longer runway of growth. This is a simple fact. I mean, and then you'll have ups and downs. These are cash generating businesses, which, even in difficult times generate a lot of cash, a little bit of course correction here and there. But I would say that both the sector and the company, if you just look at it, let's say compared to countries like Thailand and Indonesia, which are kind of, one step ahead of us in terms of GDP, have a long way to go in terms of growth.
Okay. Let's really appreciate your time. And we've discussed soaps, shampoos, hair color, promise to the shareholder, GDP, quick commerce. And trust me, I have still more questions. Aisha ke sawal next time ke liye.
Thank you.
Thanks.
If you like this video, then like, share and subscribe to ET Now.